Hello, Octane Therapy here. It's my YouTube channel anyways, and I have decided to do something completely different today. I've been posting car-related autocross mostly videos on here for years, and they've never garnered much view. That's where the Octane Therapy name came from. For reference, and originally the plan was that I was going to do I had motorcycles and boats and jet skis and stuff, and I was going to do all sorts of fuel octane related fun activities, but those plans never really came to fruition. And the only thing that I've actually gotten on my channel in the 10 years that I've had it that has garnered any attention is really my Steel Panther videos, which are not monetizable, but and it's not like I've had 1 million views or anything. Anyways, I got one video that maybe has 250,000, 500,000, somewhere around there, but and I'm still into octane related activities, although I've been posting some travel videos. Anybody who actually is paying attention and watching may have seen some of that, because I've been getting into more of that, and that's somewhat octane related. But though my travel vehicle truck only uses 87 octane, and it even had some 85 octane at times, but and it seemed to consume that pretty well. But it's still octane, even if it is low octane. So not sure how important that is. But lately I've been trying to think about other things that I could do here, and I actually did try to spin off a channel that was travel related. I haven't gotten anywhere yet, but I was going to spin my travel stuff into that one. I made the channel, but it's called The Roads Less Traveled, but there's nothing on there. There's one video from this weekend at Rolex 24, but other than that, there's not much on there, and I'm not sure when I'll get around to do much in there. But so one of my other passions, to get to the point of this video, is economics, really. And I'm not an economist professionally. I'm a software developer, working for one of the big, not the biggest, but one of the bigger tech companies that's been around for a very long time. And I won't mention names, but because that's probably not a good idea. But that's what I do professionally. And for the past couple of years, I have very unsuccessfully tried to be a stock trader. I've always been into economics. I was an A+ student in macroeconomics in college, and I've always kind of considered it a hobby. Being the age that I am, I kind of entered into the workforce and started investing, although I did actually make my first investment in Qualcomm in the 90s. Before the dot-com boom, and missed that opportunity, and then the dot-com burst of 2000 was when I started my career, and that's kind of obviously a lot of people my age didn't have the same effect, but for me, it's made me a perma-bear. I've always distrusted the stock market, and distrusted the crazy moves that it makes. And that has not really worked out that well for me, as you can imagine. If I had been smarter, I could be retired now, as I enter my 50th year on this planet. And yes, I look much younger than I am. I will attribute that to clean living. Not that, but although I do live pretty clean these days. I am a teetotaler, and I don't use hardly even consume sugar. My only vice really is caffeine and black coffee. But the reality is I am unmarried and have never had any kids, and so I think that's probably keeps my life less stressful. And I think that I hope anyways that is keeping me younger. Feel younger anyways. I don't feel like I'm going to be 50, but the calendar says otherwise. But anyways, the point of this video is I have in my pursuits of the stock markets and trading in the last few years in particular, and always been excited about economics. I have are interested in economics, and then I went through the dot-com burst and some recessions. Then being a tech worker, I've had at a big company, I've had many layoffs. The first company I worked for was a venture capital startup that failed, but that's how I ended up working for the big companies. We got acquired by them in 2002. I've been there ever since, and I have, of course I have 401k, and I have invested in the stock market and here and there. And I also went through, the great financial crisis and Great Recession, as they referred to it. And in that period of time was when I really dug into like economic history. I may go more into that kind of stuff, but there is a specific purpose for this video today. And before I go on too long, I'm going to get into it. But I was just giving a little background because I had never talked about anything like this. I don't have anything set up for videoing this kind of monologue type thing. I usually just use my phone, using my GoPro here instead. But I do have a stack of race tires back there. So there's your Octane Therapy content for this video. I may end up, if this starts to be something that I do more regularly, I will probably make a new channel. But as for now, I'm just going to put this on Octane Therapy, and I might, I might come up with a better solution for doing a monologue. But anyways, the point of the video today is stock market related, economics related, maybe even a little politically related. But yeah, as a trader and somebody who monitors the stock market on a regular basis, I noticed a strange occurrence yesterday, and that would be this. This is Meta stock, and it is yesterday's ticker after hours. This is starting at, here's the close, and of course they had their earnings release yesterday, and you should see here that that earnings report was pretty terrible. And I was actually walking on the beach when this came along. I get Yahoo Finance notifications, and this is the first thing that I saw. I saw reported earnings of $1.76 a share, and where the estimate was supposed to be $2.26, which is 22% loss, or miss, I should say. A pretty big miss, not real good. There was you can see on here that there was a revenue better than expected of 2.2%, which is, not nothing, but it's not really that great when your earnings are so much less, and that's because the expenses were extremely high, and that's probably inflation related. I haven't seen a breakdown on that, and that's not really the point of this just yet. But as I get this notification from Yahoo Finance as I'm walking on the beach, I also flip quickly over to the Meta stock ticker, and I see that it's up. And this was shortly after 4 o'clock. I see that it's up 14%. I'm like, well, what? So I then go get back home, ride my bike back home, and I try to see what's going on here. So I'm bring up my Yahoo Finance website, as I have up all day every day, and I start digging in. You see here once again, this is the estimate for, they say 222 here, 226 in the other site, but whatever, but roughly the same, and an actual of 176. Pretty big miss there. And I start looking through, and this is 15 minutes after the hour, 20, and I see nothing. And in fact, I brought up Yahoo Finance Live, and I started listening in, and I noted that most of the commentators and whatnot, and I'm going to put that in quotes, commentators nowadays, they were talking about this like it was some kind of great earnings beat. Many of the headlines were literally saying beat on the top and bottom line. Well, I don't think that missing your earnings by 22% is a beat on the bottom line. Math is hard, but that doesn't seem right to me. So the headlines and whatnot, other than that first little thing that I got from little notification I got from Yahoo Finance, all seem to be backtracking, and I thought maybe there was a misprint or that was wrong, but I came back and confirmed it in several places. That surely was the earnings report, earnings number, and it was a huge miss. And by this time, the stock's already gone up 15%. And I'm like, wow, this is crazy. And I'm like, so I spent some time digging in, and it took me a while. It was probably 4:30 before I finally found what I think was the cause for this. And if you scroll through the news here, it wasn't really until today that this other news started popping up. And that news was that they also announced, conveniently enough, at the very same moment that they released this huge earnings miss, the very same time they released that they're going to buy 40 billion, and that's with a B, billion dollars worth of stock buybacks. And I'm like, well, that would explain it, but it's, in my mind, that opens up a whole another world of questions, because 40 billion is a lot. From a little bit more research, I noticed that they had only committed 10 billion previously to stock buybacks. And I have a pet peeve about stock buybacks. I think they're illegal. I think they're the ultimate insider trading, and I think that they use these. The media spins it off as being this great thing for investors. And I know for the last few years, when we've had 0% interest rates, it does make fiscal sense, given that it's legal. I don't think it should be, but it is legal. All companies do it. The company I work for does it probably even worse than most, because it does make some fiscal sense. I mean, because you can do it, you can leverage it. They can put out corporate bonds for billions of dollars to sell those, and I'm pretty sure that the Fed, for a couple of years there, they were buying. I've seen mixed results on that, so I can't say that for sure, but I'm pretty sure they were buying corporate bonds, because they couldn't buy corporates. They can't buy stocks, technically, the Fed. My good buddy Jerome Powell. But I'm pretty sure they were buying corporate bonds. I have seen some things say that they weren't. I know they were buying REITs, which, surprise, surprise, the housing market went absolutely bonkers for 2 years while they were buying, what was it, $40 billion a month in REITs. That shouldn't be a surprise to anyone. And now they've stopped buying the REITs. Almost a year now, they stopped buying them, and actually they're trying to sell them. I don't think they're having a lot of success. The stock market, the housing market's crashing. Big surprise there. I think the same thing goes for the stocks. and the corporate bonds, and that interaction of corporate bond purchasing and stock buybacks. Because what companies were doing was they were running up a lot of low interest debt because interest rates were extremely low, buying back their own stock, which should be pretty obvious, but that results in the stock price going up, which is why it's spun as being this great thing for shareholders. Of course, when you have things like PE ratios go from the teens for these big, huge companies to 30s, I mean, is that really a sustainable long-term path to shareholder growth? Historically, you would not support that cause. And, you know, for years, they proclaimed that low interest rates justified those higher PE ratios. Well, guess what? Interest rates aren't low anymore. So, yeah, these companies still have pretty high PE ratios, even with the big sell-off that we had last year. Of course, a lot of that, you know, it was called a big sell-off, but a lot of it gets erased in just the last month, January of 23 here. You know, the freaking Qs, the NASDAQ are up 20%. I mean, it doesn't erase all the losses, but it's a pretty big bounce. But anyways, I diverse. So they've been doing this for years, and, you know, it's legal. I think that they probably time these stock buyback purchases to be the buy the dip. Everybody says, "Oh, dips always get bought," and they blame it on people. I think that I mean, I'm sure people do it, but I think that maybe the catalyst and the impetus for the people buying the dips is the corporations themselves buying the dips. And if you don't see at least a moral dilemma with that, then I don't think you're paying attention. So what I think I observed yesterday was the perfect example of why this should be legal. Because if you'll notice, you know, at the close, Meta was trading here in 153, and literally within minutes it was up 13%, 14%. Now, I'm an average investor. I pay a lot more attention to this than a trader, and I pay a lot more attention to this than most people. And the only headlines that I saw, it took me 30 minutes to find out about this $40 billion in stock buybacks that they announced. Yet that 14% move there happened in 6 minutes. And the only headline that I had seen was a notification from Yahoo Finance, and the only thing that I could find when I got back was some jumbled headlines that were incorrect, lies, and a notification that they missed on earnings by 22%. That's not good news. Yet in a matter of minutes, the stock is up for 14%. Call me a conspiracy theorist, but well, guess what else happens when the earnings are released and they're public knowledge? Well, the silent period ends, and insiders can trade. So, me as somebody who pays a lot closer attention to the stock market than the average person, could not find this information about the $40 billion, yet the stock price went up 14% in a matter of minutes. As soon as the press release for the earnings came out, I contend that was not human beings, or not what's the word? Retail investors that ran that up. Plus, it's after hours. It's a little bit harder to buy stocks in after hours. I can, but it's harder. That is a huge move. I mean, the volume on it, actually, the volume wasn't even that much, which is kind of even more puzzling. If you think about it, I mean, the volume was low. So, well, by minute 6, the volume was pretty big. 141 million. No, 41,000. That's still pretty low, actually. Well, for a minute, I guess that's pretty good. But yeah, to run a stock price, a big company stock price up 14%. I don't know, folks, but that to me, the realization that I came to is that seems an awful lot like insiders. I'm not sure how I could come to any other conclusion. I mean, that these people knew that they were going to announce this, and again, you can say what you will about me, but I'm pretty sure that that whole $40 billion stock buyback announcement was not an accident. The fact that they had that and said that in their earnings report, during their earnings report call, so that means they already had it on the books, right? It was probably buried in the earnings report somewhere. I haven't actually read that, but that means that they could act on it because it's public knowledge. Earnings is public knowledge, and they probably already had on the books that they were going to buy this $40 billion stock buyback. So, there you get it, 14% increase in 5 minutes. And of course, if you look at the chart for the rest of the day, it continues to, let's say, it went as high as 28% up today. Before reversing, which is beyond absurd. So, it is my premise that this was not at all an accident. And this big green candle you see here was insiders buying in, and they knew that, and then that announcement of that 40 billion, people would just completely forget about their huge earnings miss, and not care. And the FOMO crowd, the fear of missing out crowd, by these guys are then going to come rushing in to the next day, and buy. And that was fully as planned. Public has been conned. And then this big red candle, not a bit of a surprise there, because you know what? Quiet period's over. These insiders who planned this whole thing, in my opinion, that's when they decided, they would say, how high can we let this go? How far will people run it? Oh, they probably thought, well, it got up to almost 200. That was about a 28% increase over the previous day for a huge company, Meta, Facebook. 28% on a earnings miss. Huge earnings miss. Yeah. So, right about there, 2 o'clock in the afternoon, they're like, okay, enough is enough. Look on this a little bit. Yeah, so here we go. Right here. 197, 130 in the afternoon. They're like, okay, we have just made a ton of money. I'm going to try to keep this clean in case someday I might want to, put this and monetize this, whatever. Not likely, but, I tend to get passionate when I start talking about these things. But, yeah, 1:30 in the afternoon here. I'm pretty sure these insiders are all like, okay, we have milked the public for enough, and flip that switch. Sell, sell, sell. And you have this reversal. Now, some of that was retail investors too, taking a profit. But I imagine at 1:30, that's when the insiders all decided, time to take our profits for the day. A real tiny profit at 28% from the day before, especially when you're probably throwing out tens, hundreds of millions of dollars into it. Yeah. So that's my conclusion as to what happened there. It opens up a whole nother Pandora's box of questions, if you ask me, as to why this is legal. I mean, presuming my assumptions are right here, why are they allowed to do this? Because what they did is entirely legal, assuming that what I'm saying is right here, which I feel pretty confident about. And it's because, the insider trading is illegal, but, this is the corporation buying the stocks back. And I think maybe I didn't throw that little detail in, but, the stock buyback is the corporation. So it's not illegal for the corporation to announce stock buybacks. And because the earnings was public knowledge at 4:01 p.m. yesterday, then all the insiders could make their trades legally again. And it's not insider trading, despite the fact that they had material. I mean, you would say that a $40 billion stock buyback is material knowledge. But it was public knowledge at that point. So 5 minutes later, 15% up. And then they just rode the coat on the wave that they created and allowed the public to give them even more millions of dollars by running it up all day, pretty much. Another 14% on top of the 14% that they ran it up. And sell, 130. And yeah, we'll see what happens tomorrow. But, ended up the day 23% up. It had been up as high as almost 29. I think it was 28.5 at its peak at 130 there. And yeah. So then the other questions here is, why is this legal? And well, I personally believe that this is legal and it's never going to become illegal because these are the oligarchs that rule us, truthfully. They have our government officials, our congressmen, senators in their back pocket. And they're in on the game too. They probably are aware of these things happening. Of course, they're not going to put a stop to their own revenue stream. My one buddy asked me today, what about the SEC? Can you make a complaint to the SEC? Yeah, SEC is, the chairman of the SEC is probably involved with it too. He's, he probably made his $1 million today as well, fleecing the public. I don't know. I have no evidence for that or anything, but I know the SEC doesn't seem to do much. And these companies that these oligarchs, these billionaires that own us and run the country, pretty much do whatever they want. Oh, and here's the other point. I don't think that Facebook is actually going to spend $40 billion on stock buybacks, because guess what? Interest rates aren't low anymore. If you hadn't been paying attention, that is a thing of the past. Interest rates are kind of high, in fact. They've come back a little bit here in the last couple of weeks with the stock market going up and liquidity increasing, which is actually bad news for Jerome Powell, despite the fact he had the stocks were up yesterday too, because the Fed decision came out, quarter percent increase, and he was more dovish, somewhat surprisingly to most of us, because he doesn't want this liquidity to be increased. That's going to make inflation come back, but that's a topic for another video. So yeah, let's look at Meta here. Let's look at some numbers, assets and liabilities here. This is what we want to see. So this is Meta's cash on hand, which just so happens to be $42 42, we'll give them a round them up there, $42 billion. Huh. So they're going to spend all of their cash on hand to buy these $40 billion in stock back? That seems a bit strange. I don't think that that would be very responsible. Not to mention, if you haven't been paying attention, Meta's been laying lots of people off. I have a friend who is one of those people. He's kind of screwed by this because not a lot of this frenzy of hiring that they did. Here's another number to look at. They have their employees, and Meta's actually not as bad as some of the other ones, but yeah, they had a 23% increase in headcount. They hired, what number is that? That 14 or 12,000 people, 13,000 people last year, and this is year. So they've been doing this for years. I mean, their headcount not all that long ago, and a lot of this is was half, a third of what it is now. Well, that trend is reversing. They're not doing that anymore, and probably, in my opinion, that's going to keep right on going. But yeah, so these are real people here. So here's the other question: how they're laying all these tens of thousands of people off? How long could they have paid these people with a $40 billion? So morally, ethically, how is that good news for the company, for shareholders? That, oh no, we're going to buy our own stock back instead of paying these employees that we hired and thought they were getting a career at a great company, that we irresponsibly hired ridiculously in the last few years at a ridiculous rate. I mean, that kind of stuff inspires people to, I don't say it's necessarily a bad thing for people to be inspired to go to college and get, a computer science degree. I got one myself, and it's worked out reasonably well for me. But moves like this inspire more people to get into the computer science degrees in universities. And well, if that's going to stop, which I'm pretty sure it is, at least for a while. In fact, it's going to reverse. This is just the beginning of the layoffs. And Mark Zuckerberg even said that in the press conference. He didn't say it in those words. I'm paraphrasing, but efficiency is the word that he used. So this is just the beginning of the layoffs, guaranteed. And yeah. So yeah, they're going to spend their whole $40 billion cash on hand that they have to buy back their own stock. Well, no, I don't think that's what they're going to do, right? That would be pretty ridiculous. Now, to their credit, I will say, because many companies are far worse, Apple being one of them. I'll show you that here in a minute, just because a lot of people don't realize this, but they only have $10 billion in debt. But guess, remember when I said a little while ago, I think I said, they had allocated $10 billion to stock buybacks last year. They added $10 billion in debt, long-term debt, also in the fourth quarter of last year. So they increased that allocation, or authorization is the word they used, for stock buybacks from 10 billion to 50 billion. That was the headline that ran the stock up, insider at first, and then for everybody else too. But but to their credit, they have not been doing this as much as other companies. Other companies have been taking advantage of the low interest rates, and the company I work for included, and it's actually one of the worst ones, to be honest. So they have not been doing that as much. They have not been selling the long-term bonds to make debt to buy back their own stock, which, again, fiscally that makes sense. I mean, pump up your own stock price, pump up your market cap for low interest rates. But now the interest rates are higher, that doesn't make nearly as much sense. So this $10 billion that they took on in the fourth quarter of last year, that's probably let's say it's at least a 4.5-5% loan. They have to pay on those bonds, probably maybe more. That doesn't make nearly as much fiscal sense. I mean, you're talking about a company whose stock went down 60% last year, maybe more, 70. That made sense when your stock is going up 20, 30, 50% every year, which was absurd, but, it happened, and everybody was giddy about it. So this fiscal equation doesn't make any sense when you're talking about interest rates that are 5-6% and a stock price that's, well, it went up 28% today, but I think that's probably fairly short-lived. That was just a pump and dump, in my opinion. And to conclude this video, because it's gone on long enough, I don't think they're going to spend their whole cash on hand. I don't think they're going to go $50 billion more into debt to buy back their own stock, which, while they're laying off people and being cost cutting and being efficient, that doesn't make any sense. All that does is serve the shareholders. And should that really be their priority? This is a company that's struggling. They're trying to build up the metaverse, and that's where their expenses are really high, and that's why they're being more efficient and laying people off. But anyways, I think it's just completely a ploy. They're taking a page out of the Elon Musk playbook, and they are lie up some more, and they have no intentions of buying $40 billion more of their own stock back this year. And my camera just stopped recording. Are you going to keep recording? Is Facebook listening to me while I'm making this video? Are they listening in on my phone? I'm controlling the camera with my phone. I talk about conspiracy theories. They keep shutting the video off. It's not like I'm broadcasting this live. That's weird. I don't know why my battery's not dead. Certainly my memory card's not full. But anyways, I think it's a ploy. I think they just did it to gloss over their bad earnings report. Do a pump and dump. I'll give the opportunity for pump and dump to them and all their friends, and fleece the public for some millions and millions of more dollars they don't need. I have always been a capitalist, a fan of capitalism. I think it is the best system that man has created for creating prosperity and wealth. But I've been leaning more into these theories that you hear of, various different theories, but end stage capitalism is the main thing here. Now, end stage is probably not the right word, but after a capitalist system has been very matured and it has become corrupt, this is crony capitalism, and it is not pure capitalism, because we have a whole bunch of monopolistic oligarchs, Amazons and Googles and Facebooks and such. Facebook's not as much of a monopoly, but it sort of is. It owns Instagram and the metaverse now they're trying to get into, but it's not a monopoly like as much as the others are. But they are cartels, and they all do the same things, and we have antitrust laws in this country that are supposed to take care of that, but again, I don't think that our legislatures care about enforcing them, just like they don't care about enforcing insider trading rules on stock buybacks, corporate stock buybacks. That is clearly insider trading to me. I don't know why it's not seen that way. I think it's because they're in on the game. Our senators don't get elected, and they don't get themselves elected. They don't run for office to make society better. They do it to make themselves rich. They all go there, and they if they come in there poor, they leave rich. That's just a fact of the matter. That is verifiable. That's not conspiracy theory. That is verifiable. You can see it. And they make no apologies for it. I think there are a few exceptions, but eventually they probably get converted to it, into the ways of the corruption. But I don't know, calling it end states capitalism, I don't know is right, but this is a couple hundred years of U.S. Capitalism, and this is where we're at. And I feel like last time when we had the financial crisis, the Occupy Wall Street movement came along. I think there's some interesting days and years ahead of us here. We're going to see how things go, and maybe I'll make some more monologues on this kind of stuff. It is something that interests me, but yeah, I just thought I'd share this, I think, distinct and clear representation of the corruption of insider trading that is called stock buybacks. And in this case, I think it's just a complete lie. It's just a total ploy. They're not even going to do the stock buybacks. They just set it to do a pump and dump and to mask over their terrible earnings report that they published. So time will tell. We'll see. I don't expect anything to come of this. I don't expect them to do anything about it, but and certainly not our legislatures. But maybe we'll have a real Occupy Wall Street movement after this crash that comes later this year, and maybe we'll see some change. Who knows? But stay tuned. Maybe I'll start. Give me a like. Anybody who actually watches this, maybe a comment and say if maybe I should share my viewpoints on this stuff more. But yeah, I'm doing this because a couple of my friends said that maybe I should. I got a lot more passionate when I was talking about it before, and their comment was that maybe my passion capturing it on film, and I'm not. I was much more calm this time. Maybe I should have been more passionate, but when I came to these conclusions after looking at all these charts and whatnot, I was pretty irate, and I do think this is something we all should be mad about, because this is BS. They shouldn't be allowed to do this stuff. Assuming my assumptions are right here, but you can disagree with me if you want, but I think it's pretty clear we are being manipulated, and there's corruption, and it only contributes to this our society, which is way too top heavy. All the wealth goes to we've generated all this wealth in the last couple of years with the stock growth. It's just multiple earnings multiples growth. It's not real growth. We haven't had real growth in a long time. I mean, debatably there are some cases of it, but debatably for 15 years. And because then, well, I'll get into maybe that other stuff later. That's QE and the Fed and all that stuff. But yeah, this has all contributed to a very top-heavy society. All this wealth has gone to the tops, and I think this is just a little micro example of that. This is literally what I showed you today is literally a one-day perfect example of how that works and how it's been working for a very long time. And it is something we should be pissed off about. And I was very pissed off about it earlier today. And I'm sure I'll be pissed off about it again. But I am going to be paying closer attention to this kind of stuff. So anyways, stay tuned.